We are getting into the last module here, the module 17 that deals with FINRA and other self-regulatory organization regulations. Again, keep in mind that the 34 Act set up the exchanges, and the Maloney Act later on set up NASD as self-regulatory organizations. And basically what happened there was that Congress asked the industry, do you want us breathing down your neck, looking into everything that you do and constantly passing laws to govern the way that you act? Or do you want to set up something where you guys govern yourselves, and as long as people aren't stepping out of line, as long as everybody's doing what they should, then that's fine. I don't know about you, I would pick regulating myself, and that's what the industry did. And so in order to stay within those lines and those boundaries, FINRA sets very, very tight guidelines on what can and cannot be done. All right, so like I say, it's not a governmental entity. It can't send people to jail, but it can basically drub you out of the business to where you cannot participate in the securities business at all. All right, and of course they're going to be cooperating with legal authorities, whatever. That's what they do. But anyway, let's go ahead and dive into these things. FINRA is the Financial Industry Regulatory Authority, and where it came from was that that NASD, the National Association of Security Dealers, once we started getting some computer technology in place, they split themselves into trading and regulation, into NASDAQ and NASDR. Likewise, the New York Stock Exchange, when regulations became more and more important and more of a job, they took their regulatory operations and separated them out from their trading operations. And one day somebody at one or the other said, why are we doing this? I mean, wouldn't it be better if we just combined the two organizations? Because, I mean, you know, it's confusing where we have differences, and the differences aren't that big. We can iron out those differences and we can make one regulatory body that covers exchange-traded securities and over-the-counter securities, and that's a great idea. Let's do it. So they merged those two, NASDR and New York Stock Exchange regulation, merged to form FINRA. And it's a voluntary membership organization. Yeah, you don't have to be a member, but if you don't, it's hard to make a living. Okay, we'll see that a little bit later on. It maintains the Central Records Depository, or CRD. When you become registered, you will have a CRD number with FINRA. And you can go up on FINRA's website if somebody wants to check you out. They can look up by name, by firm, by CRD number. All right, and so so that's the CRD number, and it stays on for quite a while. Eventually it drops off, but as long as you're registered, you're going to have a CRD number. And then for several years thereafter, I'm not sure exactly how long. But the membership application is made by a member firm. Now, not you. You'll do it through your principal because you will become a registered representative. Representatives have to represent someone. They represent the member firms. Member firms apply through the FINRA district office to join the organization. So like I said, the firms are members, and then affiliated persons must register also. The benefit of membership: discounts member to member. That doesn't sound like a lot, but remember that the way that we get compensated in the industry is with discounts. Let me show you, okay? This is an old buddy of ours. Okay? We looked at it this way. And by the way, there's you. This guy pays the public offering price. This guy gets the NAV. And what we said was that the difference between the two was the sales charge. Remember this one? And so what happens is that the selling concession drops out here, the underwriter's concession drops out here, and then the fund gets the NAV. Going this way, and by the way, this is where your compensation is coming from. But let's go back this way. That's what's going to make this make sense. The fund takes the shares and sells them at NAV to the SPUD. That's a discount from the public offering price. The SPUD marks them up to the tune of the underwriter's concession and then sells it to the broker-dealer. That's still at a discount to the public offering price. The broker-dealer takes those and marks them up to the tune of the selling concession and then sells them to the public at the public offering price. Like I said, going one way, you can see how the sales charge components drop out. Going the other way, you get the whole concept of a discount, member to member. Now, if this broker-dealer is not a member, if they've been suspended, if they've been, the registration's been revoked, okay, they're treated as a member of the general public, and all of a sudden, you know what happens? Boom, public offering price. And between public offering price and public offering price, there's not a lot of room to make money. Okay? So that's it. It's short, sweet, and to the point. If you're not a member, you ain't gonna make any money because you can't buy at a discount to mark up and sell at a retail public offering price. All right, and so that's the benefit right there. Non-members, and again, whether it's just some company who has never registered, or whether it's an individual that's an affiliated person who's under suspension, they're treated as a member of the general public. Boom, you can't get any of those discounts, you can't get paid commissions, you can't whatever. Okay? So anyway, that's the benefit of membership. Banks ineligible for membership. Banks typically is no, not, will not be, cannot be, excluded from, not included in. You have a statutory disqualification from registration rather. Let's read that one backwards, okay? You cannot become an affiliated person, or for that matter a member, according to the statutes or according to the law. If what happens? If you willfully filed a misleading or incomplete registration statement. You know, if you've got kids, you know this line, you've used it or you will, okay? I want to know what happened. I want the truth, and if you don't tell me the whole truth, you're lying to me. So I lie on my application. You really think they're going to? No. No, they're not going to approve me. And when they find it out, as they will, guess what? I'm going to be statutorily disqualified. If I willfully violated security laws or SRO regulations, I was a crook over there, I'm going to be a crook over here. I'm going to be statutorily disqualified. If I caused a broker-dealer to be suspended or expelled, suspension is temporary, expulsion is permanent. If what I did was so egregious that my broker-dealer ignored it and they, boom, hey, guess what? I'm out of the business like forever. If I've been convicted of a felony in the last 10 years, now time out. I just got out of prison having served an 11-year sentence for mail fraud. Am I statutorily disqualified from association with a member firm? No. Because the thing is, even though that's a felony and it's a money felony, based on that alone, I can't be disqualified because if I've served 11 years, my conviction had to be at least 11 years ago. Okay? So I've served that 10-year period of time, I cannot be statutorily disqualified. And likewise, a securities or money misdemeanor in the last 10 years, disturbing the peace, you know, a public nuisance of yourself, you know, DUI, it's misdemeanor or something. I don't know what misdemeanors are. It's not the legal, it's not the bar exam. Okay, it's just that there's not money involved or securities, it just doesn't count. Or subject of suspension from another SRO, and that's what I call the if you're in trouble at school, you're in trouble at home clause. You've heard that one, haven't you? Yeah. So if I'm in trouble with the Municipal Securities Rulemaking Board, I'm in trouble with FINRA and vice versa. They all have that. State to state, you're going to see it as well. Okay? And to fail to tell somebody that, well, that's a material misstatement. So you got to come clean anytime anything happens. Or if you're the subject of a court injunction, it may not have been an SRO, but if a court says No, you are prohibited from operating in the securities industry. You are enjoined from doing so. FINRA is going to honor that court order. I mean, that's what they're all about, is upholding the law. So of course they're going to honor that court order. And that's what a court injunction is. Now, can we use the name FINRA on letterhead, business cards, on the front door? Absolutely yes. The thing about it is, though, that you've got to have FINRA less conspicuous than the name of your firm. It has to be in smaller type size. Now, there are guys who measure the letters. If it's not obvious, they're going to measure them. And you cannot imply that FINRA membership is any type of approval, because nobody anywhere, whether individually or from a business point of view or a regulatory organization point of view, nobody approves anybody, nobody approves anything in this industry. Okay? So if it says approved, it's the wrong answer unless you're looking for accept. Okay? All right, so anyway, less prominent, smaller type size, and not apply any approval. The types of registrations that we have for individuals, every now and then we'll see a question pop up on these. And we've referred to these in some of the other sections of the presentation. But you have general securities representatives who can sell stocks, bonds, mutual funds. They can sell limited partnerships, just darn near anything. Okay? That's the Series 7 that you have to take. This, though, this is where the focal point of your question will be. What can you, as a Series 6 licensed rep, sell? Well, obviously, you can sell prospectus offerings of investment companies only. So face amount certificates, you'll never do it because they're obsolete, but you could. It's a correct answer. Unit investment trusts, yes. Open-end investment companies, absolutely. Closed-end investment companies, we talked about that. Not a good business practice to do so, but you can actually sell shares of closed-end investment companies on that initial public offering only. Now, you can't get them out of it, but you can put them into it on the initial public offering. Probably not a good idea unless you work with somebody who's Series 7 licensed. Okay? Just not a good business call. And then with proper insurance licensing, you can also do variable annuities and variable life. Then a U4. What is the U for? It is for getting you registered. And then when you get out, you'll get a U5. Now you'll see recruiting ads. We want someone who has this kind of a book, this kind of time in the business, and a clean U5. You've had nothing on the regulatory side. That's a clean U5 coming out of the business. And by the way, if you go from broker-dealer to broker-dealer, you don't transfer anything. What you do is you just cut it. And you're over here, you resigned from this and you disassociate yourself from a broker-dealer, period. You get a U5, and then over here you come to the new broker-dealer and you re-affiliate then with another member firm, basically from scratch. You're going to fill out a brand new U4. You're going to give them the U5 that you get, because they're going to want to make sure and have it on file, part of the new broker-dealer's due diligence, right? But, like I say, it's not like you move or transfer. Now, if you go from XYZ brokerage firm in Seattle to Poughkeepsie, fine, whatever. But if you go from XYZ to PDQ, cut the cord with the one and go over to the other and start from scratch. All right, as far as registration is concerned. So no transfer registration, withdraw and reapply. Principals have to register, and we talked about that. Your manager actually is an extension of the firm. That's why they're called principals. When they speak, the firm speaks. The qualification exams for new registrants, and if you've been out of the industry for 2 years or more, then you have to retake the exam. And oh, by the way, you cannot just park your license someplace. This is something that changed several years back. It used to be that you could say, hey, can I just hang my license here for a couple of years because I might want to get back in the industry. So, oh, yeah, sure, no problem at all. You pay all the fees, okay, it's fine. No. If you're out of the industry, you're out of the industry. And so therefore, if you're not active, it just goes into suspension for 2 years, and after that you have to retest. Okay? Okay, so the 2-year period, if you're out of the industry. Persons who are exempt from registration, basically, are you involved in any way in the trade? If so, then you got to register. But if not, then you're going to be exempt. So if your duties are strictly clerical or administrative, if you don't participate in the sale, if you don't participate in commissions from the sale, and so like for instance, administrative assistants, a lot of times they won't actually participate in a sale, but they'll be compensated as a percentage of the commissions that are generated by their rep. Wait a minute, they'll need to be licensed to do so. Okay, now, if they get, the rep says, I'm gonna pay you X number of dollars every week, month, quarter, whatever, regardless of what my business is. Now, that's a different story, okay? That's a thank you. But if you get X% of whatever I generate, you'd better be licensed. Okay, then disciplinary actions. What can FINRA do? Good possibility of seeing this, especially on this many things that they can do. It looks like an all of the following except question to me, and the except is going to be send you to jail. Remember, it's a civil authority. In fact, not even that. It's an independent, self-regulatory organization. But they can censure you, which basically is shame on you. You should not have done that. You should be publicly embarrassed because you broke our rules. Okay? That's a censure is basically what it is. Fines that are deemed appropriate under the circumstances, restitution of customer losses if appropriate, and then suspension, revocation, or barring from membership. If it's less than a year, it's suspended. Beyond that, it's a revocation. And if it's like a lifetime, you're actually barred from the industry. Okay, so anyway, you guys have had fingerprints made. If not, guess what? It's going to happen. In fact, I tell you what, I had so many fingerprints made. And, you know, I was back when they didn't do it electronically. They still have the little deal where, some of you may have done that. And I knew exactly what the drill was. So anyway, now moonlighting or outside employment, outside business interest or business activities, it's okay. It's okay, but what you have to do is you have to give a prior written notice to your employer. And what is an outside business activity? It's anything for which you receive compensation. So on the weekends, I make birdhouses, and then I take them down to the flea market once a quarter, and I sell my birdhouses at the flea market. I'm sorry, that's an outside business interest. Now, I doubt seriously that your principal's going to have a problem with that, okay? But tell them. Tell them. Okay? In fact, I was the officer in a homeowners association when I was registered. No compensation for it. You know what I thought? Better safe than sorry. I'm just going to go ahead and give them notification of it and say there's no compensation and that's it. And there wasn't any problem with it. And I probably didn't have to do that, but why not? I say it's easier just to go ahead and put it up front. Private securities transactions or selling away. Selling away from your own firm's trading desk. That's what that's referring to, okay? Not prohibited, but don't do anything in secret. And always get those approvals ahead of time. You have to give written notification to your principal in all cases, whether there's compensation or not. If there is compensation, you need to get that consent back. Because see, that's a trade that's not going to go across your firm's trading desk. So we're talking about here that the guy across the street, he owns a dry cleaner. All right? And the next door neighbor, they've been talking, and the neighbor says, well, you know, man, if you need to expand, this is the kind of thing I would love to invest in. Let me know. Well, it's privately held. All right? But the guy says, well, you know, I've been thinking about expanding. Can you make a $250,000 investment? He says, sure, no problem at all. How do we do it? I don't know. Let's talk to Dan. So they come across the street. Dan, we've got an issue here. You know, can we do something like this? Can you help us out? You know, whether it's compensation or not. If I say, yeah, I can help you out, here's what you need to do, then I need to give notice. If there is compensation, that's going to be, what's going to go one way, money, what's going to go the other way, stock or a bond. Yeah, that's a security. And so I've got to get consent if they're going to compensate me in any way. And my broker-dealer then will have to maintain that trade on its books and records just as if the over-the-counter trading desk had handled it. Okay. All right. At this point, we get into conduct rules, and I'd really like to talk about conduct rules and the uniform practice rules and what have you, kind of as a separate discussion. So we're still on FINRA, but this provides us kind of a convenient breaking point. So let's go ahead and cut this module off, then we'll come back and pick up there on conduct rules.